Using the Fifo method, we need to process a transaction where inventory is used for advertising purposes. What is the Fifo method? Well, we simply assume that the first items in are the first items out, and we always remember it may not be true. It's just an assumption, so we don't have to identify each individual unit. Let's take all the rules that we need to know, so we're getting through most of them, and we're up to this one down the bottom here. Inventory used for advertising. How do we deal with that? Let's take an example. So we always, inventory used for advertising, we're always going to assume FIFO. We're going to apply the FIFO rule. So let's take an example. April the 1st, bought 5 units at a cost of $10 each plus GST of $1, receipt 0909. We never include the GST, we just want the cost amount, so we've got the date. April 1st, receipt number under details, 5 in at 10 for a total of 50, which leaves us the same. Now, they're not literally going to be stacked like this in the stock room, but we'll metaphorically assume that they are. So that's what they're a nice neat pile like that. Then we buy another 10 units for a total of $200 plus GST on credit from Hella Hoops invoice 45. Yeah, we don't want the GST, but we do need a unit price. So we've got a total of 200 for 10 units, so that's $20 each. April the 2nd is our date. The details was invoice 45, 10 in at 20 for a total of 200, and we assume, even though it's not true, that these $20 units here are in a pile after the $10 units because they were first in. Then we sold 3 units for $30 each plus GST, receipt 5712. First thing we remember with the inventory card is we never need the sale amount, we just deal with cost prices in here. We'll need the sale amount for other things, but not for here. So we can ignore that. What we do want to know is which 3 units. And because we're using this method, we don't, it's actually impossible for a lot of things to identify which particular unit this is, okay? So all we're going to do is assume that it must have been the first 3 in. So it must have been these 3 $10 units at the top there. Even though it probably wasn't, it's just easy to assume that it was. So I'm going to do April the 3rd, receipt 5712. And in the out column, 3 units at $10 for a total of 30. What does that leave me? It leaves me 2 at 10. And 10 at 20. Probably doesn't. That's just sort of an assumption that we're making. And then we've got today's transaction. The business donated 3 units to the local football club to promote the business at its matches. So how do we deal with this? Well, we always deal first in, first out. So which 3 units? Well, I have no idea in reality, but I'm just going to assume it must be this $10 one here. This $10 one here, because they were in first. And then it must be this one at the top of the next pile for $20. So that's what we'll assume. April the 4th, we do memo 1. I'm assuming it was the 2 at $10 at the bottom of the $10 pile, and then the first one at the top of the $20 pile. And I'm done. So the rule was, for inventory use for advertising, assume first in, first out. And we're doing this so we can now record this in the general journal. We know that when we donate inventory, we call it advertising. Advertising is an expense, so that'd be a debit. Inventory is a credit because it's going down, but we don't know the amount, and that was why we did the inventory card, because we now go to this inventory card and we see the totals. So 2 at 10 for 20 and 1 at 20 for 20. So if I add these 2 numbers together, I'll get $40, and that's the amount I'm going to use. And remember, inventory will be a credit because it's going down, because it's in the out column. And that's how we deal with inventory when we're using it for advertising purposes under FIFO. So if we add that to our rules now, we've done sales and purchase returns, drawings, and now under inventory used for advertising, we can put in the rule. It's simply first in, first out.